The IRS announced its annual Dirty Dozen list of tax scams for 2025, warning taxpayers, businesses, and tax professionals to be cautious of schemes that threaten their tax and financial information. These scams, from email schemes to misleading tax credits, often peak during filing season, but can occur year-round as fraudsters seek to steal money and personal data. The Dirty Dozen campaign lists 12 common scams to raise awareness and protect taxpayers and tax professionals. Scammers exploit tax season to deceive taxpayers with traps like identity theft and false tax credit claims. For over 2 decades, the IRS has promoted the Dirty Dozen campaign to warn against these scams. Launched by IRS under Lemon's leadership in 2002, this initiative aims to combat emerging frauds. Together with the Security Summit, the IRS collaborates with state tax agencies and industry professionals to educate the public on scams. The Dirty Dozen highlights tax-related identity theft, contributing to the protection of millions of taxpayers and billions of dollars from fraud. Last year, the tax community initiated the Coalition Against Scam and Scheme Threats, KSST, in response to an increase in social media-driven scams. To safeguard taxpayers from these ever-evolving threats, the 2025 IRS Dirty Dozen list identifies the following 12 major risks. Email phishing scams. The IRS reports numerous email and text scams targeting taxpayers. Fake messages from entities posing as the IRS, state tax agencies, or tax software companies aim to steal personal and financial info for identity theft. Beware unsolicited texts or emails. Phishing. An email from fraudsters pretending to be the IRS, using fake tax refunds or threats of legal action to deceive victims. Smishing. A text message with alarming language like, "Your account is on hold," or "unusual activity report," containing a fake link. Scammers may also promise unexpected tax refunds. Please be reminded to never click on unsolicited communications claiming to be from the IRS, as they may contain malware. Such communications could also be a method used by malicious hackers to deploy ransomware, preventing legitimate users from accessing their systems and files. Bad social media advice. In 2025, incorrect tax information on social media remains a concern. Platforms like TikTok often spread misleading tax advice, such as misusing Form W-2, leading to identity theft and tax issues. The IRS and KSST urge people to avoid these scams and rely on trusted sources like the IRS and tax professionals. The IRS warns that knowingly filing fraudulent tax returns can result in severe civil and criminal penalties. Scam alert. IRS individual online account help. Scammers may pose as helpful third parties offering to assist in creating an IRS individual online account at irs.gov. No help is needed, as IRS provides tips on how to sign up and avoid scams. The account gives access to personal tax information. Be cautious. These scammers aim to steal personal details and file fraudulent tax returns to claim refunds. Fraudulent charities. Unethical entities posing as legitimate charities remain a persistent issue, often exacerbated during times of crisis or natural disasters. These scammers establish these fraudulent organizations to exploit the public's goodwill. They aim to gather funds and personal details, which can further be used for identity theft or other forms of exploitation. Donors who contribute money or goods to a charity may qualify for a deduction on their federal tax return if they itemize deductions. However, these charitable donations are only deductible if given to a qualified tax-exempt organization recognized by the IRS. False fuel tax credit claims. Some taxpayers incorrectly claim the fuel tax credit meant for off-highway business and farming use due to misleading advice from unscrupulous preparers. Verify eligibility before using Form 4136, credit for federal tax paid on fuels. Credits for sick leave and family leave. Available to self-employed individuals only for 2020 and 2021 during the pandemic. Errors occur when taxpayers incorrectly use Form 7202, credits for sick leave and family leave for certain self-employed individuals, based on employee income instead of self-employment income. Incorrect self-employment tax credit claim. There is misinformation on social media about a self-employment tax credit that does not exist, causing taxpayers to file incorrect claims. The actual credit available is called the Credits for Sick Leave and Family Leave, which has specific eligibility criteria. The IRS is closely examining these claims, so taxpayers should be careful. Improper household employment taxes. Taxpayers may fabricate household employees and file Schedule H, Form 1040, household employment taxes, to claim a refund based on non-existent sick and family medical leave wages. Overstated withholding scheme. This issue involves individuals being encouraged, often via social media, to fill out tax forms like Form W-2 or 1099 with incorrect income and withholding information. They report large, fictitious amounts to claim significant refunds. If the IRS cannot verify the information, refunds will be held for further review. Taxpayers should file accurate returns using legitimate information like employer-issued Form W-2. Variations of this scheme involve different forms, such as W-2G, 1099-R, 1099-NEC, 1099-DIV, 1099-OID, 1099-B, the Alaskan Dividend Fund, Schedule K-1, and unspecified sources of withholding credit. Misleading offers and compromise. The Offers and Compromise (OIC) program helps people settle their federal tax debts when they can't pay in full. However, some companies mislead those who don't qualify, costing taxpayers thousands. Taxpayers can check their eligibility for free using the IRS Offer and Compromise Pre-Qualifier tool. Ghost Tax Return Preparers. While most tax preparers are professional, be wary of those who charge based on the refund size or refuse to sign the return. These ghost preparers avoid including their IRS Preparer Tax Identification Number, PTIN, as required by law. Never sign a blank or incomplete return. Instead, seek help from a trusted tax professional. New client scams and spear phishing. In 2025, the IRS reports ongoing spear phishing attacks on tax professionals. Cybercriminals pose as clients, sending malicious attachments or links to gain access to sensitive information. Unlike general phishing, spear phishing targets specific organizations or businesses, posing a higher risk by stealing client data and identities to file fraudulent returns. Tax pros should be cautious and scrutinize any suspicious requests before sharing information. Warning signs include poorly written sentences and unusual word choices. Scammers may exploit hacked email accounts to find genuine emails from previous victims. Baker's dozen, beware of other scams. The IRS warns that beyond the dirty dozen, numerous other abusive schemes and fake tax avoidance strategies can mislead taxpayers. These may involve different trusts, offshore schemes, and individual retirement arrangements. More details on past schemes are available on the special Dirty Dozen section on IRS.gov. Although the Dirty Dozen list is not a legal document or an official enforcement priority, it aims to inform taxpayers and tax professionals about various scams and schemes. Report abusive tax schemes and preparers. The IRS urges reporting of individuals promoting improper tax schemes and preparers who create faulty returns. Use online form 141242 or mail fax a completed form 14242 PDF with supporting materials to the IRS Lead Development Center in the Office of Promoter Investigations. Mail. Internal Revenue Service. Lead Development Center, MS 7900, 1973, N. Rulon White, BLVD. Ogden, UT 84404. Fax 877-477-9135. Taxpayers and tax practitioners may also send the information to the IRS Whistleblower Office for a possible monetary award.
Thanks for watching. Please like and subscribe.